Hello.
Yeah, good morning. Right.
Good morning, everyone. I, I'm Dr. Rajendra Sinha, Professor and Chairperson, Center of Excellence in Banking at IFIM Business School, the sixth AACSB accredited B school in the country, and also the leading eminent outstanding banking personalities with us. And we have today Mr. TCA Ranganathan, who brings exhaustive experience across various banking financial institutions. He was former CMD Exim Bank of India, uh, MD SB Then he was a non-executive chairman Indian Overseas Bank. He's a very versatile banking personality. We have with us Mr. Vyas, who is MD and CEO of PNB Housing Finance. Prior to that, he has been PMD State Bank of India in various key assignments, and he has been holding advisory positions in various banks as well. Coming to our today's topic, sustainability of Indian banks in COVID-19 pandemic. We know that a sound and effective banking system for any country, it's very important for the healthy economic development, and commercial banks are part of the financial system, and amongst their various roles, one important role is mobilizing the public deposits and putting in investment across various sectors in the economy. And through credit dispensation, banks help in boosting the growth of manufacturing, trading, services, activities, apart from the individual needs. And overall, this help in boosting the economic development in the country. In the recent past, because of this COVID-19 pandemic, Government of India has taken a series of measures. Reserve Bank unleashed various measures. So this financial stimulus, apart from many things, was reduction, cutting down of repo rate, even reverse repo rate, cash reserve ratio, and apart from that, providing a working capital needs comfort level through 3 lakh crores of collateral free loan for MSMEs and industries as a part of 20 lakh crore of government financial stimulus to the industry and agriculture and other sectors. In Apart from this, the RBI taking a step of deferring by 6 months payment on for the interest and installments. This has come as a great relief for the MSMEs, industries, for the people. And we must noted that during this difficult time, the Indian banking system has been live through its outlets, branches, ATMs across the country, and have been providing services continuously. So that reflects the commitment of Indian banking system in a difficult time like this to the nation. At the same time, we know that it's a very difficult time for the banks for sustaining their growth, their business growth, and the profitability. And that is the focus of our today's discussion, interactions. Before I come to the topic, briefly for the last 3 years, the developments which have taken place in the Indian banking system. Five associate banks of State Bank of India, along with the Bhartiya Mahila Bank merger, took place on 1st April 2017. And SBI got its place amongst the top 50 banks globally. Further, the Vijaya Bank and Dena Bank merger took place with Bank of Baroda, And maybe from this, the government getting confidence, they went for another round of consolidation of Indian banks. And further announcements for the merger came in August 2019 for 10 public sector banks, for merging them into four large banks. Presently, from 1st April 2020, there are 12 public sector banks in India, compared to 27 prior to 1st April 2017. Besides that, there are new generation, old generation private sector banks. Apart from, after getting 2015 license from RBI, there are small finance banks and Paytm banks as well. Coming to Mr. Neeraj Vyas, you have been associated with the merger process in State Bank of India as DMD, and also you have been in advisory position for merger to the Indian Bank earlier. And as we know that the merger intent has been giving competitive edge, bringing improvement in governance, reducing administrative cost, apart from bringing efficiency in funds and treasury operations, and so on and so forth. But at the same time, there are challenges associated with the merger exercise, and especially uh, employees related issues remain a major concern because of differential parts, then seniority and promotion related matters, and adjustment to the new culture of the combined entity. As far as five associate banks, they have a broader commonalities with the SBI, its parent. But the 10 public sector banks merging with relatively different work culture, it was more of a challenge relatively, relating to employee related issues. We would like to understand from you your observations on this. Mr. Neeraj, yeah.
Okay, thanks, Dr. Sinha. I think whether it is SBI or any other bank, in a country like ours, work culture will remain different, or other culture would remain different. Because if I compare SBI Bhopal Circle, the SBI remaining the same with the SBI say Trivandrum Circle, the culture would be different. The only thing SBI had common was because it was working on the same platform. To a large extent, technology was similar. To a large extent, policies were similar. To a large extent, processes were similar. So I think to that extent, the job to merge the five associate bank into SBI was quite easier one compared to the job to merge the other four announcement or before that Bank of Baroda announcement. I mean the Government of India announcement to merge Dena and Vijay and Bank of Baroda. But by and large, if I tell you, we will divide into two parts. One is the staff side issue, and other is other issue. So yes, the when it was announced, the primary task for the management of the merging entity was extremely difficult because they were operating on a different kind of policy, processes, and systems. So system, if I'm talking about system, it was not the technology, their own internal systems. So the first task was to make this process, but because the announcement was made in the month of July, I think enough time was available for all the banks to bring those things together. And in that process, they tried to bring all the policies similar to one another or each other because there were three banks, three each in two merger and two banks in two merger, so put together 10 banks. So that time was utilized by them, and in fact, I was closely associated with one of the banks in the merger where we were only two banks. And there also, culturally, it was almost different. One was predominantly a south-driven bank, and one was an east-driven bank. Most of the branches were on the east side or northeast side.
Yeah, that's
So
correct.
I think
Allahabad Bank. Yeah, yeah,
so
yeah.
a lot of, and I interacted with both the people because I was based in Chennai talking to the bank and visiting Kolkata also. So there are a lot of difference in the culture, but ultimately, as I mentioned, that culture is will remain in a country like India will remain different pockets of the country. So It is basically the fear of uncertainty which has to be taken care of. When we talk of culture mostly impact the human beings. IT and all that can be taken care of. So the thing that we started is a portal was started where the employee can give their fear, what fear or anxiety level they have. And if you keep talking to people through either the town hall or through technology, or now today the technology has done wonders, and this can be largely taken care of. Of course, HR is a long process. It doesn't happen in 6 months time. HR I would say it will continue. So if you have to divide, whole process of merger, you will have to divide into three, as I told you: policy, processes, and systems other than technology. That should be attempted first. That becomes very easy because it is ultimately, you have to align the two policies or three policies into one. That is extremely simple because you take best of everything and then combine into one policy and do it depending on what kind of market you are operating in. The other big piece, which even if you see from the government's perspective of announcing the merger, they are not gone by the regional presence of the bank. Like one north-driven bank has been merged with south-driven bank. So okay, you can say that synergy because one was very strong in north and other was strong in south. But that was not the case. Basically, the decision to merge this bank was driven on the basis of technological platform. So if somebody was working on say Finacle, they were decided to be merged together, and somebody was working on Bankmaster, that is owned by TCS, not Bankmaster, Banks One, and then those banks were picked up. So this technology plays a major role. What I want to say about this is technology plays a major role, and even if you have similar platform, like we had in SBI, it was a Banks One, then also it takes a lot of time to integrate the technology into one.
Yeah,
So
that's true.
the yeah. So the as I said, merger involves three types of thing. One is process, systems, and legal issues are to be taken care of first. If I am saying that first does not mean that we work sequentially. All the work has to be done systematically. I mean, parallelly. So that is the first priority because legally you have to merge the entity on the date that the the notification comes. So that is the thing that is required to be done with a speed and time bound manner. After that comes the technology because technology is extremely important. Without technology, you cannot reap the benefit of merger. So faster you do it, better for you.
Yeah, that's
But
true.
yeah,
Yeah, yeah.
but yeah, but what happens within the technology itself? Like this TCS is owning the software. TCS is the vendor for one bank, both the bank. But there also the versions are different. So it takes a lot of time. Lot of time technological team from both the banks or the three banks have to put their heads, find the gaps, and then finally come with a solution, which takes anywhere between 6 to 9 months. Now,
Yeah.
I'll give one example. When I was handling with SBI merger, before that one merger had happened, Kotak and ING. So I had visited Kotak's office and found that for 1 year or more than 1 year, the Kotak branches were having one ING terminal and ING branches were having Kotak terminal. So
Oh,
virtually they are
parallel
working
two
with two.
terminals.
So
Okay.
they were virtually working like two banks. The only
Yeah.
difference was the name was changed, but the systems were not much. So technology plays a major role in merger, and faster you do it, you reap the benefits because
Yeah,
your
miss.
MIS is available,
Yeah.
control systems become faster. The third comes, which is the most important piece, as you rightly mentioned, is the HR issues, promotion processes, taking care of people. And this is an ongoing process that doesn't happen in 1 year time. It minimum takes 2 year time, particularly looking to the fact that, two different culture, like one is the East driven bank, one is South driven bank. As it is on the road itself, you can feel the difference between the two kind of culture.
Yeah, Mr.
I was in,
Neeraj, yeah,
yeah,
taking time further ahead, that
yeah,
technology you talked about,
yeah,
but
yeah.
technology, as you said, that each bank has its own vendors for it. Now, it has cost implications also when the call is taken that the merged entity will have one common vendor only for uniformity across the branches. So the cost implication aspect obviously also comes because we would like to have your views on that also.
Definitely, the first year or maybe first 18 months, the cost would go up because you have to bear the changes in both the system to bring in alignment with one system. So the first year of merger, you will see typically all the banks will show higher cost on technology improvements because they have to bring both the system in line, and they have to adopt the best of the two, or rather improve it further from whatever they were. So because
Okay.
the organization has become larger, you have become very big bank. Suddenly from say 3,500 branches to you have become 7,000 branches. So you have to see that server capacity is all right. So many products are available on as a periphery to your main system. So you have to see the best of the product you retain, further improvement you bring. So typically for first 18 months, you will incur more cost, but definitely you'll start reaping the benefit as the time passes.
Right. Mr. Neeraj, another important challenge which comes that there are overlap of branches. Say if it is a north and south based that kind of a situation, banks, then it may not be that much overlapping, but there are instances where at the same center, the proximity of the bank branches, ATMs, so here the relocations or the mergers issue, which obviously the management has to take a call to meet the objective of this cost saving. But at the same time, customers initially do have certain issues and concerns when the mergers of the branches is taking place or relocation of the branch is taking place. So initially, these challenges obviously customer related would be coming, and how do you look upon that? And although later on the synergy strategy would be providing better results, but initially these challenges certainly would have been there.
Yeah, to some extent it would be there, but as I told, with the onset of the advent, I mean, when we are moving towards technological improvements, almost 80% of the transaction-based things have moved to alternate channels. When I say alternate channel means, they either move to ATM or they move to internet banking or other kind of payment platform where the customer is not required to go to the branch. It is only 20% of the transactions which are still happening in the branches. And typically, I will say, some of the people like, pensioners, they prefer to go to the branch. Some of the financial inclusion accounts also, they are not having access to internet banking, or probably they don't know how to operate, or if they know how to operate, probably maybe they do not have a smartphone. So these are the only people probably I feel they feel some kind of the necessity to go to the branches. But when we do this relocation and all that, you see, this relocation is being done only when the branches are in close proximity. So what happens when we are doing relocation of branches, we take care of it that, if two branches are located, say, in the radius of 500 meters, the one is moved to a different place where we do not have any branch. So I would say instead of discomfort to the customer, probably it's a convenience to the customer because I have now more branches and I can move them according to my requirement where I don't have a branch, so that I position a branch where not only in terms of business I derive more business, but the my customer who are to travel to a different distance coming to this branch, they don't have to travel to that much distance. But as I again mentioned, with the arrival of technology and internet banking and mobile banking and all those things, I don't think physically anybody is required to go to the branch. Even with the kind of pension certificates and also can be taken online with Aadhaar, if it is your account is Aadhaar enabled. So I don't think even the pensioners have to visit the branch to submit their life certificate. Umang is a software of Government of India. You make use of Umang software, put a dongle in your mobile phone, and you can submit your life certificate also sitting at home. Because I'm taking example of pensioners because I mean most of the time people talk that the pensions are put to inconvenience when the branches are merged or relocated. But I think that is more of a from the optics point of view, people say that one branch has been merged, so people will be put to inconvenience. But there is already one other branch in the close proximity, and this branch is moving to a place where there was either no bank or no branch of this bank, and no branch of this bank, so that the customer residing around that branch they have better convenience. Plus, it helps the bank, in getting more business and reducing the costs too. Because if you're deriving more business, indirectly you are adding to the bottom line and profitability goes up. Same
Yeah,
thing
yeah,
happens.
I
Same thing
agree with
happens.
you. I agree with you that the technology has brought easiness in today's time of merging and relocations where the customer inconveniences are minimized.
Yeah.
Uh, 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 Now, coming to the other aspects, Mr. TCA Ranganathan is here with us. And the COVID-19 pandemic, we know that banking system is operating, but not at the full strength. The movement of the staff, the interaction with the customers, the footfalls, of the customers in the branches, and also their demand level has come down. So, in such a situations, banks have really the challenge for sustaining their business level. And this financial year 2021, especially if you look, although the Q4 result itself, where a part of it only was this COVID March related, that was also subdued performance for the banks by and large. This financial year 2021, how do you see the months ahead, the situation, how they are going to tie up this difficult time? Yeah, Mr. Ranganathan.
Yeah, thank you, Professor Sinha. It's a pleasure and honor to be here with all of you. But in trying to answer the question, I would like to first go into some of the preliminary assumptions which are there. When you talk of an impact on a banking system, there is a certain image which you must have in your mind. A banking system is different from a bank. So if there is a COVID impact on, say, staff movement, it will impact a specific bank, but it will also impact the banking system, and the two are different. Banking system is all banks together. When all the banks together, whether or not people are going or coming or happening, the impact is not that much, because the bank has an average business level which remains more or less uniform as a system. It may change between branches, it may change between banks, but the whole banking system is the equivalent to the of a economy of a country. So if the country's economy has remained X, the banking system will remain what it was. If the country's economy comes down, the banking system comes down. This is regardless of what happens to individual particular banks. So we must distinguish the impact on a banking system from the impact on a particular bank. Now, as far as the COVID impact on the banking system is concerned, we'll have to see what happens to the economy. The current discussion which is going on and what people are saying is that the country's economy is likely to contract, and the contraction rate is set to be anything from between 2 to 4% compared to the previous year, because of the impact of the lockdown, because of the impact of constraints in international trade, because of lockdown in international trade movements, because of impact of changes in customer preferences because of the COVID. So the combined impact of that is likely to have an economy impact of -3 to -6%. What does it mean for the banking system as a whole? I'm talking banking system as a whole. Banking system as a whole has us on a starting thing, what the close of the balance sheet last year was, 31st March 2020. All the banks had a certain amount of deposits and advances. This amount of deposits and advances grows between 31st March 2020, it would have grown to 2000 March 21. What is the normal growth which takes place in an annual average year between two year ends? It differs from in the very high growth years, like India was having high growth in 2010 to 14. It was going up to by increasing by about 18 to 20% per year. In the low growth years, it was going between 9 to 12% to 15%, 12% per year. So balance sheet of the whole system was growing either by 20% or by 9 to 12%. Now it may not grow by either 9% or may not grow by the same. It may in fact remain stagnant to what it is. Will it come down? For it to come down, the total monetary this thing has to come down. If the money supply comes down, the bank figures will come down. That is not expected and that is not anticipated by anyone. And regardless of what happens in the economy, M3 growth is going to take place, and that M3 growth will ensure that the system deposits will go up by the amount of the M3 growth. So the banking system as a whole, the fortunes will be dependent not on what happens to COVID or non-COVID, but what happens to the M3 growth. And M3 growth is likely to remain at a certain level the entire year. So the year-end position, if you see the balance sheet, the M3 growth will take place to ensure that the deposits of the banks are up to a certain level. And because deposits and advances need to tally out in a balance, has to balance, assets level also will go up. So even though the economy has contracted, the system balance of the banks would be at what it was or slightly higher. As far as individual banks are concerned, the impact will differ. And the impact would depend on the actions of each bank. Now you're saying, as very rightly, that COVID is going to have a negative impact on movement of people and marketing effects. But if you reflect and look back, and we have all been bankers, how much business comes from meeting a customer and going and trying to meet customer calls around that, or how much business comes from a reputation of a bank and the reputation for good service of a bank and the reputation of products of a bank. In the time when I was in active service, the joke in SBI used to be that business booked is walk-in business minus driven out business. When people used to say marketing, they said, no, you have not driven out so much, that's why you booked a certain amount of business. The pull of a bank drives business. And the pull of a bank comes from various aspects. It's your quality of your technology, quality of your services, quality of your people, how friendly they are. That pulls in people. Now, if there is a COVID impact and we are not able to go, and I have got 2 accounts in 2 or 3 banks, which bank will I patronize more will depend on which bank treats me better. So which bank treats me better in such a COVID time, where if I make a phone call or send an email, I get an email reply fast. Or I put a query, the query gets replied, or the system works efficiently. So these factors will determine. If you say 2 years later, what will be the difference on this, on the bank system? It is the same difference what Neeraj Vyas was talking about, technology. If you look at how technology is taking over the roles of banking over the last 7, 10 years, 15 years, from the position is completely changed. The performance, reactions of banks and bankers depends on the quality of the technology. The reputation of the bank depends on the quality of the technology. If technology is well maintained and of good quality, banking services rise in the level of their qualities, except for credit matters.
Yeah, very correctly you said that there will be differential performances and there will be varying factors. Say individual banks, how their management takes perceives in the situation, and also the technology level and the reputation level of the individual banks. But overall, the banking system as such, it is linked to the overall economic growth. So that is going to move in tandem with it. Coming to the other aspect which we in the banking system we look upon the bottom line and the profitability matters in the corporate world. And here, when it comes to the cost, so the usual cost with the banks will be there. There is staff cost in the public sector banks, in I hope in the private sector banks, although they have a differential management approach. And the cost of say the rental cost, which the if increment is there, whether it is COVID or otherwise, that increment will be there for staff also, that will be for the rental also. So if the expenses remaining high and the income part, well, it is getting squeezed up, obviously the profit will get impacted. Now, in such a situation, do you think that some private sector banks will go for reducing their staff expenses and maybe layoffs and all could be there. Public sector, I'm not talking, they have a different structure altogether. But in the private sector, this could be the situation.
See, if I get the question correctly, you're asking whether the COVID impact would have a negative influence on some private sector banks
Yeah, yeah.
in terms of their profitability, right? I would like, first of all, mention that different private sector banks have got different levels of efficiency and different levels of costs. And if you are looking at a particular bank, you have to see not what the COVID situation is, but what their trend behavior has been. And the trend behavior will determine how they react. As an illustration, just about 15 days back, there was a small item that Lakshmi Vilas Bank is finding it difficult to honor the wage agreements and wanting a reduction in the wages because it's not able to pay enough, have enough business flow because of capital adequacy. 5 days later, ICICI Bank is planning to give an 8% increase in assistance because of the COVID warriors to reward the COVID warriors. Both the news items came in the midst of the COVID situation. Now, was it because of COVID that Lakshmi Vilas Bank was having a problem, or it was not? It has something to do with aspects other than COVID. So, when you look at the performance, you have to see what the trend performance of a bank has been. If you look at the trend performance, if there are studies which have come out in the RBI currency on finance about the profit and loss accounts of various banks, and if you see that profit and loss account studies are there, the reports are there, the operating profit level has been showing a growth over a period of time in the last 5-7 years. The difference in the profitability record has not been in the operating profit levels, but in the provisioning levels and how their banks are experiencing the provisioning impact. And their fortunes in making profits or losses, whether private sector or public sector, has been because of the provisioning differences. This trend is, I think, a stronger influence on bank profitability than the marginal movement of restrictions imposed by COVID. As I mentioned, when COVID restricts movements, it restricts it for everyone. And what pulls a customer into a bank is not whether the staff is going out or coming from there, but the image of the bank and the responsiveness of the bank to the customer.
Yeah.
So the COVID impact will not be there. The trend impact of what the bank has been undergoing because of loan loss provisions or other things will be making an impact.
Yeah, true, true. Another important dimension for the banks is NPA management. And NPA over the last couple of years, if we see it, then the growth of NPA has been there reportedly because of transparency in the system brought by RBI, and the level 8.95 lakh crore was there 31st March 18 for TSB banks. Now, September 2019, it came down, and again, it was attributed to resolution and recovery strategies and efforts of the banks. Now, in COVID-19 situation, where overall it has an impact on slowing down the economy, businesses, MSMEs activities, the although 6 months deferment moratorium has been given, but the SMA 1 and 2 accounts always are there in the books of the branches, and that obviously in today's scenario, the focus would have got obviously diluted. So in this situation, do you foresee a short of in NPA's level by 31st March 2021 for the banks?
So I think there are two parts to the question. One is the existing NPAs, one is the future NPAs. As far as the existing NPAs is concerned, I have written a book also on this, all the wrong turns, and I have a chapter on banking where I discuss the NPAs.
Yeah, very encouraging. Yeah,
very good book, sir. Very good book, sir.
In that, I have brought out that it is a very odd situation that 5 years into the NPA things, the sectoral composition of NPAs has never been discussed by anyone and or published by RBI. We don't know where the sectoral composition is. And when the recoveries are taking place also, you've noticed that there is no discussion of sectoral composition of recoveries which is happening. So the effort or lack of effort of a particular bank in getting recoveries can only be discussed if you have the basic information that is not available. Right? So the submission which I made in the book and which I am seeing over there, I think we can discuss it as separate. It's a big survey. Bulk of the NPAs were in the PPP projects of various dimensions. Whether it was the power projects, whether it were road projects, whether it was their recoveries were happening because of dynamics in those respective sectors. And the banks as a whole, as a banking system as a whole was benefiting or suffering. The role or the contribution an individual bank could make in improving the recoveries was not significant. As far as future NPAs are concerned, the COVID impact NPA of the next 12 to 15 months, the NPA impact will come based on the sectoral impact of COVID. And if you see what COVID means, the basic impact of COVID has been on the psychological orientation of an average consumer and an average producer in the country because of a new concept called social distancing and a new concept of being what we call lockdown and not venturing out for fear of catching infection. This is something which has come into the psyche. And this is having a differential impact on various sectors and various types of industries. All the digital, as far as the digital companies are concerned and the technology sector is concerned, the impact has been positive. So the amount of business which is going to video conferencing firms or technology firms has gone up. They will be experiencing a boost. But travel-related firms, all the airlines, all the busing services, everything entire in the transportation sector, the entire hospitality sector, the hotels, the restaurants, those businesses are taking a big hit. Wherever there was a consumer-intensive experience, and the consumer-intensive experiences in all cases of personal care, like saloons or beauty shops or beauty parlors or health fitness or sports activities, all those sectors will take a hit. Consumption demand will also take a hit if there is a lockdown and a lot of people are not going, especially. So the nature of textile demand, for example, textiles, the demand for trousers and coats and suits would come down. The textile, this would work its way through the system.
Yeah, now it has come. Yes, sir. The last few sentences could not be heard. There was some disconnection.
Okay.
Yeah.
Wait from.
Yeah. You are talking about the new opportunities and the motors, the tires, and this automobile sector will have a hit. But there are opportunities for this other tech platform businesses which are coming up. Yeah.
Yes.
Yeah. So that way, this situation has given to other opportunities also, which businesses are looking at this point of time. The delivery mode and the kind of customers' requirements in this scenario. So both situations are there. and situation overall it does not look like that grim, and the businesses are fighting, striving hard to come up with whatever their resources. They are looking also at innovations for their product and services. But yes, certain sectors, as you mentioned, that prima facie they have been hit because of this COVID pandemic. Another aspect now for both of you, uh, especially the merged entities from 1st April 2020, which they were looking forward to their new strategies and the implementations of their plan and coming out in a big and better way, that this first year of their merger existence, it would have been a difficult time for this newly merged combined entity of four PSBs for their business growth and mobilization, the sustainability aspect. Uh, Mr. Ranganathan, you can comment, then we will go to Mr. Neeraj for this.
Yeah, see, the thing is, the economy itself is in a slowdown mode and itself is likely to contract. Since the economy itself is likely to be in a contracted mode, even if the banks had been hyperactive, their business would have contracted. So the negative impact of not being able to go is not there to that extent. Get my point?
Yeah,
So
true. Yeah.
it is a kind of a blessing in disguise that they have got additional 6-8 months of lockdown to get used to each other's style of working and get their act together. Because the economy as a whole is not doing well.
True.
So these banks would not be put to a challenge of competition from other banks because everyone is in a lockdown position.
Yeah,
So
yeah.
I think these merged banks have a slight positive benefit coming because of lockdown.
Yeah, Mr. Neeraj, you can also add your perspectives.
Yeah, I fully agree with sir. In fact, post merger, the first quarter you remain busy to set the house in order. And during that period, when you were trying to set your house in order, all other banks were also under lockdown. And as sir has mentioned, that economy itself is contracting. As per the IMF projections now, earlier they were saying that we'll grow at 1.9%, and now they say we'll be contracting at 4.5%. So a reduction in their own assumption in 1 month's time from 1.9% growth to 4.5 contraction. So there's 6.4 negative in fact. So there's no business. In fact, the business will also contract. And because the banks got merged, they're trying to set their house in order. So they did not lose time because all other banks were under lockdown. So business was not there. Other banks were not doing business. But notwithstanding these issues, there were some issues which definitely impacted the merger process. The very simple thing is like technological merger, which I was telling you is very important one, and in 6 to 9 months time you have to cover it. So when the lockdown was announced, like on 24th of March, when I was associated with one of the merger, we had planned on a whole lot of activities on 31st March that will take care of all these activities, important ones, from technological perspective, so that on 1st of April we go live on these activities. We could not complete that exercise because people were under lockdown. Work from home situation was not activated because we were not prepared for that. It took some time, and we lost in the process around 45 days. So to some extent it got impacted, but it did not impact the business. And second was movement of people, because we had set up some kind of controlling structure for the banks. We could not move people, and because the new technological setup like MIS and all were not planned according to the new organogram of the organization, that also suffered. But that did not have much of the impact because business was not there. But going to the other side, because I'm associated with PNB Housing Finance now, I've been watching that, particularly in individual segment, the demand is picking up. Earlier we were thinking that the demand would come sometime in the month of November and December. But when I saw my performance up to June, that has indicated that demand has already started picking up. So I think it's both sides. One side is that yes, we lost first quarter, but going forward, I feel this lockdown has not impacted as much as probably we thought.
Yeah, you will get to
Yeah,
know a correct position of what is going to happen only 6, 8 months down the line, not now. It's
yeah,
too
yeah,
early.
that's true. But very encouraging aspects, Mr. Neeraj pointed out that the June performance has been encouraging. And now, the various stimulus given by Reserve Bank of India, the liquidity is ample in the system. But because uncertainty is looming large, therefore the banks also may become selective in picking up and taking exposure, and may go for only high rated companies instead of earlier in the normal situation which they would have picked up. This selectivity on the part of the banks for taking due diligence, you can say, for taking large exposures, not to any customer but to selective customers only. That could also have an impact for the other borrowers also, who will would be looking forward for the support from the banking system in the normal situation. Yeah, Mr. Ranganathan. Yeah,
See, I think you have to start off with the basic premise that banks are subject to what the regulators want. Ever since India switched over to Basel III, the regulatory impact on banks is very clear. And the regulatory implication of Basel III is that if a bank lends to a AAA, it will only have to keep 20% of risk weight as capital listings. If it lends to a non-investment grade, it has to put up to 150% of risk weight. So the regulators want the banks to treat different type of customers differently. It's not the bank's intention or bank's desire. Regulators want it. So
yeah,
because Basel III norms are being imposed, the banks have got no choice but to treat customers differently and to be what you call not very enthusiastic about lending to non-investment grade customers. Because if you lend to a non-investment grade customer, you have to put 150% of the risk, as I said, as a risk weight capital. So not 100%, 150%. So there's an opportunity loss involved in lending to a non-investment grade customer. That
yeah.
is the main
Very correctly. The Basel guidances remain for all the banks to tone up their capital adequacy ratio, and if the quality of asset is not up to the mark, they would require to have more capital provisioning. So that way, that's a normal intent of the banks to go for high-rated companies where the provisioning requirement will be lesser. So that guidance exists. I appreciate that point, which is there. Obviously, the banks have certain guidances to follow, and they will be abiding that. Another aspects which I am looking, that many banks in today's time, when COVID-19 pandemic is there, they have started looking at their processes. They have started looking at the product and services. So as far as the liability products, we say the deposit products, online offering has been there. Even account opening at the last moment, many compliances uploading on the system, but at the last moment for signature going in the branch, where opening has been there. Online opening of fixed deposits can be there, and various other benefits are there. But for the asset side, for the loan products, still lot much has to be done by the banks for providing it online facilitating, and that too when the interaction in today's COVID-19 pandemic, which is going to continue for some time, physical interface is less. So, how the banks are going to leverage out this situation for adopting more to the technology-based enablers for their products and services, and also their processes also. Mr. Ranganathan, yeah, please. Then we will go to Mr. Neeraj. Yeah.
See, the ability of a bank to provide technology-related services depends on two things. One is the technological systems in the bank. Second is the technological capacity of the customer. A bank may have a technological product, but the customer may not be able to use it because of his or her own inability. Take, for example, a very simple liability product called internet banking on an ATM. If you don't know how to operate a internet banking system, you will not do internet banking. You do not know how to use a card, ATM card, you will not know how to draw out money, and you will go to the cash counter and take out cash. And that, so it's not that the lack of technological sophistication of a bank that is involved, but of a customer. When you're talking of loan products, the same thing applies. Some customers or some type of classes of customers have the technological ability to deal in a technological environment. And these are basically medium to large companies of various types. There, I think in the last 5 to 7 years, the physical interaction between a bank and a customer has already been almost next to nil. We don't meet those people except when you go for a visit or go and interact with them. They don't have to come to your bank to draw, to do anything. A company today can operate its accounts without coming to a bank. It can issue letters of credit without coming to a bank. It can accept suppliers, accept bills discounted without coming to the bank. So that those products, but some companies can't. So they don't have that ability or the sophistication to access to a facility. When we're talking of today's environment in the COVID situation, two type of company businesses will happen. One is a new technology business. Wherever it's a tech business, they'll have no problems in dealing with any of the banks in the public sector, and also I think 95% in the private sector. All the banks have a fairly good average level of technological sophistication in providing loan products. But you have the small companies and the smaller end of the MSMEs, those people will have a problem. The question you have to now ask is, in this COVID situation, will those people be able to set up business? Is the physical environment conducive for setting up new business today when there is lockdown, when there is social distancing, when there are various types of movement restrictions, when you have very rapidly changing taste profiles? The taste preferences of a customer is changing very, there for a normal MSME activity. A normal MSME activity would you can put in hospitality of various eatables, consumables, and all that. All there, because of movement restrictions, there has been a demand contraction in various places, in textiles, in various handicraft products. Because of restriction movements, there is a demand collapse which has taken place because customers can't go out, so there is no. They don't want to buy because they can't go out, and there is no place to go there. On the clothing products and a lot of MSME activities and various types of retailing and apparel manufacturing there, if people are not able to go out and meet people or have functions and all that, the demand for such accessories and clothing also has come down. So that is impacting the MSME sector. And it's not the inability of the banks to offer technological products.
Yeah, I appreciate your point that MSMEs, 99% of them are micro enterprises. So they have the issues. Now, Mr. Neeraj, please, yeah, your views on that. Yeah.
Yeah, I agree with Ranganathan sir that it depends on both. I mean, the one who's offering the services and one who is availing the services. A simple example is we do the video conferences very often from the office, from the home. Now, if the bandwidth is not available at home, the connectivity would not be there. Even if you provide a product for someone to avail it of, he may not be in a position to avail it of unless he has the proper tools available. Coming to the specific thing that liability and asset sides delivery, which COVID-19 has offered because of social distancing norms, lockdown and all. Yes, it's a good thing. Lot many people are looking into it, and to a great extent, servicing was already there. Servicing and operations were already there on tech platforms, like as I mentioned. Every bank has internet banking. Nothing to do that. Internet banking, mobile banking. Wherever you are, just pick up your mobile and you can do your transaction. That is not a problem. Lot many banks have introduced even the liability products like opening your account, sitting at home. You can open the account through taking help of Aadhaar and all that. But I have not come across on the asset side. But I feel that booking loans like car, housing, individual loans, and all that is extremely easy to book through technology in case you make use of Aadhaar enabled technology, where the customer can give his biometric and KYC is done, and even disbursement can be done without the customer has to visit the bank branch. So this product, I think, will become in future. It will become very very popular. Even for that example, in PNB housing, we are very closely looking into housing loan deliverables where the customer is not required to visit any of our branch. So it will be all seamless to the extent that even when it reaches the underwriter of PNB Housing Finance, till then there won't be any manual intervention. Then he would sanction the loan, and thereafter even the disbursement would be done. So we are doing it. So these kind of loans are possible. But as Mr. Ranganathan sir has mentioned that MSME, yes, I find they will have, one is the tools available, and two, there are issues in respect of these loan unless you tie up like Amazon and Flipkart and all that based on its payment behavior, where everything is online. You sanction some limits, which is happening in the market. Some of the vendors are doing it, and some of the banks are tied up with these vendors. But by and large, it is has not got major of the market. So this is the major market which is required to be serviced, and for that, even the work is required from both the sides, from the bank side and from the side of the MSME, because unless he has all his transactions online reflecting either through GST return or through income tax, it would be difficult for any bank to do it online sanction and disbursements. So I
Yeah.
think unless entire thing is brought
Yeah.
on paper
Correctly said.
online.
Yeah,
Yeah.
correctly pointed out that it has to be, the tech savviness has to be at both ends. The beneficiaries also, they have to upgrade their skills, have to become tech savvy and bring that inputs upgradation skill in their system. And the banks, obviously, they should also reach out for at least the loan parts. They have to ease out and have more tech-enabled processes. We will quickly take one question which is saying that yes, the consumer spending concern has been there in COVID-19 pandemic. So as a result of it, the retail banking aspect also will not be picking up, and the personal loan segment will be affected over because of this lowering of demand. Yeah, Mr. Neeraj. Yeah.
Can you repeat the question? I missed the first part, please.
Yeah, there is a one question from audience that since the demand has come down for consumer spending, so that will be have an impact obviously on the economy also, but at the same time for the banks also, uh, uh, there will be decline in the personal loan segments, retail loan segments.
Yeah, I think you have to link it with the overall growth in the economy. the economy is going to contract by 4.5%. Ultimately, even the growth in the loan book would go down. So, as I mentioned, housing is showing a demand. In fact, the other day I was hearing on YouTube Mr. Rajji Bajaj, about his scooters and motorcycles, and he says the production has come to full. They are returned back to the normal, almost normal supplies. So in those cases, the demand is picking up, and if these things are picking up, I think on consumer loan also the demand should pick up. But
Yeah,
I feel that it will take some time before
yeah.
one is the
Quickly,
near
yeah,
fear.
yeah,
Yeah.
yeah. One question interesting that whether this is the time for having a bad bank in India, that is a NPA bank in India. So, Ranganathan, you can comment quickly. Then,
No, that see that see, what does a bad bank do? Basically, you can take off your NPA accounts and put them into a different bank.
right,
So your provisioning requirements for future get eliminated.
right. Yeah,
That is one. Second is if it's a single bank and all the banks put their asset there, then the interbank discussions don't have to take place. Right now,
yeah,
every big company or big NPA account has more than 10, 15 bankers. If it is kept in one place, then the interbank discussions get eliminated. One person takes a decision. Now, the government is resisting it because they don't want to put up capital for that. Whether it will have an impact on recoveries, as I mentioned at the start, the sectoral composition of NPAs is not known to us. So, which type of NPA account gets placed in that bad bank and what is the sectoral movement of that, this thing only will decide. If, for example, there is an NPA account which is a gas based power plant or a thermal power plant with a no coal mine, whether it is parked in 20 banks or whether it's packed in one bad bank, if the raw material doesn't come, that plant can't function and the NPA will remain NPA. So no bank, whatever it is, can do any kind of a recovery measure on that. Or if it's a road project which is half complete and land acquisition is not taking place. There are some projects lying like that. Again, the banks can't do anything. So the recovery position on with it. But in commercial companies or some medium-sized manufacturing companies where there is a discretion of movement, a bank can speed up decision making for the banking system.
yeah, yeah. Rightly said that these are the challenges when one watches upon such an idea. Mr. Neeraj, now we will be almost closing down. You can also share on this or some other you wanted to. Then we will close.
Yeah, I think it's a good idea, bad bank, but the two things would be required, as Mr. Ranganathan has mentioned, the capital is required, and two, when the banks have to transfer it, they have to take heavy haircuts. Now, if you have made the provision, fine. Otherwise, the first year would be difficult for them. If the provisions are not available, because all these bad loans and would have some kind of haircuts. So unless you have provided for those haircuts, it will be difficult for you to transfer, and that would take a big hit. But one good thing would come is if specialization would come, that what bad bank would be dealing all kind of NPAs. But the question remains that if an NPA on account of some structural issues, unless you take care of that structural problem, that NPA will continue to be NPA, whether you transfer it to bad bank or let it remain in the current bank.
Yeah, yeah, rightly said. And we had a comprehensive interactions on various aspects of the banking system. And hopefully, the banking system in India will be able to rise upon and meet the challenges of this COVID-19 pandemic, and will do innovations also on their tech fronts, tech delivery boards. And it will be on the other side for the consumers also to upgrade their tech skills also, so that they derive the benefits if the tech enablements are made more and more at the bank's level. It has been a pleasure for having inputs from eminent bankers like Mr. Ranganathan and Mr. Neeraj. Once again, thank you very much, and it has been a great pleasure, sir, for interacting with you, both of you. We shall remain in touch with both of you.
Thank you.
Thank you.
Thank
Great
you.
honor. Thank you.
Thank
Great
you
honor
very
to be
much.
with you. Thank you very much.
Thank you.
Thank you.